Hey everybody, I hope everyone is doing well and had a good day. Thank you for joining me for today's end of day review of the Emini 5-minute chart on Friday, January 2nd, 2026. We'll talk about the daily chart briefly before we get into the 5-minute. And here, let's see. The market has been in a trading range. And we'll call that maybe a best fit line of resistance, just a horizontal line. Every time the market reaches this line, we find selling, undershoot here, test, sellers, overshoot, sellers, overshoot, sellers. So what happened most recently? We have this rally with consecutive bull bars, good for the bulls. The problem for the bulls, maybe it's a late leg. You can count 3 legs in a channel. 1, 2, 3 legs up. Increased risk of reversal. And if you're buying high in a trading range. What happened? We have a gap down. That's a bear breakout. Sort of an endless pullback here because then we got another bear breakout. And notice this bear breakout bar. Notice the overlap with the prior bar. Very little overlap with the prior bar, and this bear bar closing on its low. And that's good for the bears. And that increases the probability that there will be, well, if there is a pullback, sellers above and a second leg down, but lower prices likely. So my thought going into the day, this is the 31st. So this is New Year's Eve. Then of course there's no trading on New Year's Day. My expectation for the following trading day is that if we do gap up or if we do test higher, we'll probably find sellers, especially if we get all the way to the breakout point here. And we'll probably get a second leg down. Now let's see if I can find, or if I can plot that price on the 5-minute. 69.36. Okay, so I basically had that line drawn anyway, and without knowing, that was just resistance from the prior day. So I had this red horizontal line drawn because of back here. Spike, pullback, channel, evolved into a trading range. We came close to it again. Obviously, this price acting as resistance. Market tested it here, sold off, came close to it again, sold off. So that's basically the breakout point. The low of December 29th, 2025. So gap up going into the day. Now, market tested resistance, breakout point here. Expecting sellers, tight channel. This is a bear breakout on a higher time frame. But the gap up, there's enough price movement on the gap up to make me believe we're probably not going straight down. The gap up is probably going to get a second leg up. So I'm expecting a test of this breakout point again, maybe up here, that breakout point, the low of the 29th, I think I said. And also, bar 1, usually, I'm talking about 80% of the time, is usually not the high or the low of the day. There's about a 20% chance that bar 1 remains the high or the low of the day on any given day. So big bear bar, bar 1, second leg down likely, but a much smaller bar, bar 2, testing maybe around a 50% pullback of the gap up, or from the start of the rally to the top of the rally, about a 50% pullback on bar 3. And reversal bar 3, gap up, pull back to about 50%, possible that we get another leg up before we find sellers. Strong reversal bar, I think if you're short, it's reasonable to exit above 3 and look to sell higher, and bulls can buy. 3, 4, reversal and follow through, good for the bulls, but now it's 2 legs up to resistance. We've gone above bar 1. It's probably a trading range open, so probably sellers above bar 1. We tried to sell off, we failed. We tried to reverse up, we're finding sellers above 1. There's a resistance area here, this breakout point. This general area is resistance. Last time we were here, the market sold off many points, so probably sellers in this area again, and also up to here. So we'll see what the next bar looks like for the bulls. Bar 5, the bulls get some buying on the next bar, but the bar closes below its midpoint and cannot close above the prior bar. And that's not as strong as it could be for the bulls. 3 bar micro channel. But why is there selling above bar 4? If this is a strong bull breakout, bar 5 should be another big bull bar closing above the high of the prior bar, closing near its high. But instead it's breaking out above the bars to the left and finding sellers closing below its midpoint. So bar 5 is a sell reversal bar. So even though it's on a bear bar, it doesn't close below its open. It does close below its midpoint. And to me, that makes it a reversal bar. It has a bearish tendency to it, stronger selling into the close. Trading range bar 6, probably sellers above, maybe buyers below, but if you're buying here, you might be buying high in a trading range. And remember, this bear breakout, 3 legs down, but it's a tight bear channel. Breakout on a higher time frame, it's probably going to get a second leg. We talked about the daily chart. Strong bear breakout bar. Even if we pull back and gap up, probably going to find sellers and a second leg down. Bar 7, attempting to break out again to new highs, but another reversal bar closing below its midpoint. So yes, it's a 5 bar bull micro channel, but it's also a micro double top at resistance. Not as strong as it could be for the bulls. And the risk, if you're buying here, where is your stop? If your stop is all the way below bar 3, your risk is very big. And if you're risking that much, whenever you have big risk, you need high probability to justify taking the trade. And can you really argue that you have a high probability of making money if you buy here at the top of a trading range? It's really hard to justify buying and putting a stop way down here when it might be a trading range and the bottom of the range might be yesterday's low. You've got a micro double top. We rallied, sold off, rallied, sold off. You might even call it a wedge. 3 attempts up. 1, 2, 3. So not ideal for buying because the risk is big, it's far above the moving average, and the context isn't great. If you're buying at resistance. I'd rather wait to see the bulls break out far above the resistance, and then if it's going to be a bull trend day, I'll have plenty of time to buy as the day develops. But right now, I'm not convinced. And then when you see bar 8, you probably have to exit longs below bar 8. To me, bar 8 is always in short. It's double top, you're at resistance, and it's a strong bear breakout bar. You can call it reversal and follow through, whatever you call it. I think it's important that the only thing you're doing here is selling. You're either flat or you're short, but I cannot justify holding a long position here, even though it might be a bull breakout, pullback, second leg. Like I said, the risk is that you've already got a couple of legs up and you're at the top of a trading range at resistance. So the pullback here can be very deep. And worst case for the bulls is actually a reversal, not a pullback. Bar 9, probably sell the close, even though it's at the low of bar 3. There's an argument that it's a double bottom, down on the open. So 1, 2, 3, reversal up, 1, 2, 3, 3 bars down again. Maybe we get a double bottom, but there's too much momentum here for me to be buying and the location isn't great. It's actually more in the middle of the range. So maybe that's the bottom, that's the top of the range, here's the midpoint. So maybe you can argue buying if the market's at support, but instead we're kind of in no man's land in the middle of the range. Reversal and follow through, and then even more follow through. Bar 9's probably sell the close. Very likely the bear breakout and follow through gets a second leg down. And where's the double bottom for the bulls? In theory, there's a double bottom, but when a double bottom like that fails, you've got to be looking for the measured move down, which is right here. And that was almost reached on bar 12. And if you use bodies, market did reach the target. Strong bear breakout, bars 8 through 11, second leg down likely. What about bar 12? Can you buy bar 12? Testing yesterday's low, double bottom. It's a very small signal bar. And if we think about the trader's equation, and we think about risk, reward, and probability, if you're buying bar 12, your risk is relatively small. And if you have small risk, then you have big reward. And the only way you can have small risk and big reward is if you have low probability. You have to think the way that institutions trade, the way that institutions think. In theory, there's always an institution buying and selling on every tick. And the only way that you can buy is if an institution is willing to sell to you. And the only way you can sell is if there's an institution buying from you. And the only way that can happen is if there's a trader's equation for both sides. This is why there's no perfect trades. You're never going to get small risk, huge reward, and high probability, because that would be a perfect trade for you. And for you to have a perfectly good trade, the institution taking the other side of your trade would be taking a perfectly bad trade. They would have big risk, small reward, and a low probability. And no profitable institution is taking that trade. So perfect trades don't exist. So if you're taking bar 12, you have to know that you're taking a low probability trade. Maybe the market bounces at support, yesterday's low, but the reality is this bear breakout down to bar 11 is very likely to get a second leg down. So any reversal we get here is probably going to be minor. Reversal and follow through, 12, 13. Probability increases for the bulls, second leg up, likely. Now in this situation, after this much selling, if I'm going to buy, probably would rather be more conservative and use the breakout bar 13 for my measurements, meaning 1R from the low of bar 13 to the close, projected up from the lowest point of the pullback, and bar 15 would reach that target. Leg 1, pullback, leg 2. So leg 1 equals leg 2, target reached there. But if you use the entire reversal and follow through, it does not quite get reached. Now we're testing the breakout point, the bar 3 low and moving average, where the traders who, in theory, the traders who bought the moving average here on bar 9 got trapped, and that creates resistance here. And you can see where bar 15 is testing. So we're in a resistance zone between these prices. So my expectation, it's also probably a 50% pullback. So the expectation is sellers in this area and a second leg down. And then bar 16, a bear breakout bar in the direction of the trend. So 16, if you're long for any reason, you should have already taken profits. And if you went for that bigger target here, you've got to give up on the trade below 16. It's still always in short. And the bears, there's too much risk that the bears are starting to get their second leg down, and that the market can go all the way down here before pulling back. So If you're long on 16, probably better to just exit the trade. And if you're flat, you can sell below 16. It's a reasonable stop order sell. 17, breakout, pullback on the same bar. If you broke this down into a smaller time frame, you would see a bear, breakout, and a pullback. And the entry bar may not look great, but the fact is 17 has very little overlap with the prior bar, and that's good for the bears because the traders who, let's say you fade bar 16, you buy the close or buy below bar 16, 17 is disappointing. You have not had a profit on the trade the entire time, and it's still below your entry price. If you're lucky, maybe it gets back to your original entry price, but if you bought, you're probably eager to just get out of the trade. And look what bar 18 did. You can see the tail of bar 18 tested the close of 16. The traders who bought were trapped, and they used 18 to exit. So the bears, even if you didn't sell here, you could have sold the close 17, you could have sold the pullback during bar 18. And both bulls and bears selling on bar 18. Bears getting their second leg down. Nothing to buy here, probably going at least a little bit lower. But although we are at a new low, so we may start to bounce and pull back here. So a smaller bar, 19, reversal bar 20, same problem as bar 12, small risk, big reward, low probability. Outside up, 21, but same problem. There, if you're going to buy, probably better to wait for a trendline break and then a retest of the lows. Does this look like a strong trendline break? And if we're talking about a significant trendline, we actually haven't really broken it yet. But to me, it looks like a push, a pause, a push, a pause, a third push. Bar 25 is leg 3 for the bulls. And on a smaller time frame, it's a wedge, 3 legs up to resistance. And 25 is probably a better sell the close bar than a bar to buy. You've got this bear breakout that's likely to get a second leg down. You've got 3 pushes up against the trend. It's probably a 50% pullback of the sell-off. So from the high to the low, it's a 50% pullback, and that's a resistance area. The traders who bought anywhere got trapped, and they're using any little bounce to exit, and they're contributing to the selling. So bear breakout, wedge, bear flag, second leg down likely. Reasonable stop order, sell below 26, sell the close 27. Target the new low. We get there on 29. So now we've had 3 legs down, not great for selling down here. Rather wait for a correction. What about buying 33? Not ideal because you're buying bar 33 is at resistance. You're back to this area where the traders who bought 25 got trapped. And although it's 3 legs down, yes, we may get a correction. I am expecting a correction for a couple of legs after 3 legs down here. But we still don't have a great trendline break. The bulls have broken the bear trendline, but they're right at resistance, and it's only been 1 bar, so will the bull breakout get follow through? And it does not get follow through. It's still a strong enough breakout that it should get a second leg up, but the upside just might be limited based on the bars to the left. The bull's trying to get their second leg 1, small, leg 2, having a hard time breaking out to a new high above 26. 37, a second reversal for the bears, and it's nested. It's a double top here with bar 26 and 37, but it's also a low 1, low 2. I think it's reasonable to sell below 37 if you're long. And if you're looking to sell to go short, maybe just wait for the bear breakout. Breakout bar 38, but weak. It's a bad high 1, or bad high 2, sellers above likely. 39 sellers above likely, and then we went outside down 40. There's the bear breakout, but now it's testing support, so maybe not great for selling bar 40, as we might be getting closer to support in this trading range. And it's becoming a fairly tight trading range, so not ideal for trading in my opinion. Rather just wait for something more clear. Lots of heavily overlapping bars here. Bears getting several legs down. 46 outside up. To me, that's a reasonable bar to buy. The only problem is you have a pretty tight channel, and if you're buying right below resistance, the moving average. So I think it's an okay buy, but not ideal. And then a disappointing entry bar. But the bulls, if they buy scaling lower, they can probably avoid a loss on the trade. And it looks like they were able to on bar 50. If you bought, scaled in, the bulls could have broken even on the trade. Very tight trading range here. Not ideal for trading. Better to wait for something more clear. 52 outside down, but a late leg. You've got at least 3 legs down here. You can call it a nested 3 legs, 1 or 1, 2, 3 legs down. So 52. It's a good looking bear bar by itself, but when you take context into consideration, it's not really the greatest location to be selling, because if you're selling 52, you're selling at the low of the day in a channel that is becoming increasingly more two-sided. It was more bearish through here, but then you start getting a breakout above this high, lots of overlapping bars through here. Now you have a late leg to a new low. 52 is probably a better buy the close bar. It's on the channel line here. You're expecting support for a couple of reasons. So 52 does not get follow through. Some traders will buy 52, front running the failure. Others will wait for it to fail to get follow through, and other traders will just wait for the bull breakout. Reversal bar 53, bears fail to get follow through, bulls can buy. Again, other traders will wait for higher probability, wait for the breakout, which finally came on bar 55. Now 55 is a reasonable buy the close bar because the context supports higher prices. Let's see. Here's a possible way to draw the bear channel. Here's the channel line. Here's the trend line. And bear channel, 75% of the time, you get the bull breakout of the bear channel. So you can think about bear channels as bull flags. The bears get a spike channel, bear trend, the channel getting increasingly weaker, more two-sided. Finally, you've got 3 legs down, and then you get this reversal and follow through 55. This is probably going to get a second leg up, so it's always in long. And if you're short for any reason, I think it's reasonable to get out above 53 if you're short, but if you're still short 55, just buy the close, get out. If you're flat, you can buy. I think the only options here are to be flat or to be long. Good entry bar for the bulls, uniform in size, very little overlap with the prior bar. So 56, another buy the close bar. 57, some acceleration. A little climactic, maybe we pause and pull back. We're testing resistance. But ultimately, this is very likely to get a second leg up, always in long. Minor reversal, 58, probably buyers below. What's the target? The way I would measure this is from the start of the breakout, 55. This is the breakout bar. So 53 is a reversal bar, 54 an inside bar, and 55 is a bull breakout bar. Breakout bar, another breakout bar, another breakout bar, and an opposite bar. So I'd measure from here, the low of 55 to the close of 57 to the lowest part of the pullback, and then I would project up and see where that takes me. And here, 69.0850, Just get rid of that, clean it up a little. So there's your target. And the market gets there in a hurry, very little resistance along the way. There's other resistance back here. The bar 3 low, breakout point, the bar 15 close. It's all in the same area. You can see the reaction on bar 63. Some selling there. This is still probably minor, but big picture, it's a trading range, so this can pull back deeper than the bulls want. And we can get back to the bar 58 high breakout point. All of this is still likely to get a second leg up, and there's probably support at the bar 58 high and the moving average. But this is enough selling for at least a small second leg down. And that may have been it, 69.70, the attempt at a second leg, although this might be a tight trading range, bear, breakout, low 1, and setting below 2 short. But tight trading range through here, if I had to do anything, probably sell for a scalp, but it's too tight to for me to really want to trade here. It's also getting late in the day, not ideal for trading. The bears, you can see, ultimately got a second leg, and then finally we tested that breakout point, 58 high, back to yesterday's low, the prior day's low, and there's a reaction at that price, and that's right around the bar 58 low where that sell order triggered. So trapped traders here, traders who sold below 58, trapped on 59, and that creates support in this area. So when the market comes back and tests that price, there's a reaction to it. And here, this is basically on a smaller time frame, bear trend, trend line break, and retest of the lows in the same bar. And then ultimately it's evolving into a trading range, probably not a bull trend. And ultimately, this big breakout, it just ran out of time, but probably going to get a second leg up. All right, that's it for today's end of day review. To go deeper into price action theory, consider getting the Brooks trading course through the affiliate link in the description of my videos. That does support the channel. And if you're interested in the trades that I take and what I've learned from Systems Academy, you can join my channel membership for ad-free videos on those topics. I've also linked Ali's website and his Breakouts white paper, and I don't get paid for that. I just think his resources are incredibly helpful. And finally, I put a link to Bob Proctor's self-help seminar, which not only transformed my trading, but also my life in general. So thanks for watching this video, and I hope everyone has a great night.